begin this segment by asking Avinash. Actually, let me bring on board Avinash Gorakshakar as well as Kunal Bothra once again. Thank you so much, both of you, for joining us on ET Now. But Avinash, coming to you, what should retail investors do in such a quiet and consolidatory markets? What sort of strategy should they adopt to make sure that their wealth is protected?
Yeah, good morning, Cheryl. See, Cheryl, I think one thing is very clear that, as I mentioned to you earlier, 2023 is going to be an extremely volatile year, and making returns in this year is going to be very challenging. So, I think the only way for investors is to actually chip in into quality stocks in a SIP mode. It may sound a little boring as of now because returns are not going to come in easy, but I think this is the best way to compound your wealth if you want to build a portfolio over the next say 2 to 3 years. So, I think the volatility should be actually used as an opportunity by small retail investors to get in lower levels of good quality stocks. We have been seeing that despite good numbers, stock prices have not going up, are not moving sharply upwards. So I think this clearly shows that there is a little bit of liquidity pressure on the markets. We have been seeing a lot of outflows from FIs. So I think that is definitely going to put a kind of a low hanging factor for the market. So typically just follow a small SIP approach and stick to your core competency of building a portfolio over the longer term. I think obviously over the next say 12-18 months, once the market recovers and hopefully all the geopolitical factors go away, you're bound to see a significant revival in market sentiment and obviously the value in your portfolio. So this should be your long-term strategy. Yeah, I think my guess is Info Edge has booked an exceptional loss in Q3, and I think clearly looking at the kind of macro numbers, the kind of improvement in the economy, core GDP growing by around 6%, which is expected this year. My sense is the job market would be doing extremely well. And I think the main cash cow for InfoEdge remains to be its portal Naukri.com. They have been nurturing a lot of startups, a lot of new companies in this company, and therefore it takes a long time for them to realize, the upside here. So my sense is, I think clearly, but just by looking at one quarter number, one should not take a call that the company has done very badly. You need to take a really long-term call here. Maybe for the next say 12 to 18 months, you should hang on. I would not be surprised this management has got a very strong competency to bounce back and would definitely reward shareholders going forward. So I think in the meantime, I would say that if the investor can even average a little bit, at the current odd levels, that would reduce the average cost for the investor and obviously give a better risk reward in the next say 12 to 18 months. So I would suggest please hold on. Don't book a loss at this point of time. See, I think as far as the pharma market is concerned, I think there's a clear trend which has emerged that most of these companies are suffering from some sort of a slowdown in the US market. I would not be surprised that even the March quarter history would be a little challenging, and I think in the near term one cannot expect a major kind of re-rating in the stock. Although they have been a very large kind of dominant player for the US markets. Clearly, new products and new molecules are still under development, and I would not be surprised that at least for the next 3 to 6 months, if the investor has a position, he should hold on. But yes, don't expect a very big upside. Only if you hold on for the next say 6 to 12 months, you could obviously expect a better decent risk reward. A time frame of 3 months is very short, and I don't think in this time frame you could make a decent kind of upside, at least as of now. Yeah, I think my guess is that Britannia from the FMCG sector should do well because after a long time, a lot of green shoots are being visible in the rural market. And I think hopefully, with the kind of, new product launches and the kind of demand signals which we are getting from the FMCG sector, numbers from Britannia could be a lot better. I think the investor needs to give in a little time frame of at least 6 to 8 months here. As far as L&T Mindtree are concerned, I think, these companies are definitely going to be dictated by what tailwinds emerge from the US and the European markets. They are already having a decent order book, but any growth numbers there would be dependent on how the overall scenario in US and Europe emerges. So I would say is that as of now, please don't switch from Britannia. Keep holding to Britannia. It's a good stock, but yes. Yeah, I think ABFRL is a branded apparel play, and I think the best part about this company is they have been building very strong, self-made brands as well as they've acquired a lot of brands from other competing players. So my sense is, if the investor has at least 18 to 24 month kind of time frame, he should definitely use the decline to accumulate the stock further because my sense is that the company has started making decent cash flows. In fact, the third quarter number also was pretty encouraging, and I think looking at the fact that the economy is now getting into normal mode, it won't be surprising that FY24 and 25 would be much better than FY23. So I think definitely it's worth buy at the current level, and he could nimble into a smaller quantity, but keep a time frame of at least 2 years, which I think should be decent enough to give a good result, risk reward. Yeah, I think my guess is that the cement sector is bound to do well in the coming year. Looking at the fact that recently cement bag prices have gone up by about 5 to 15 rupees per bag, and most importantly, input prices have started also easing out. So that should help the cement companies. In fact, our sense is that the January to March quarter could be much better than the December quarter, which was supposed to be a very negative, quarter for almost all the cement companies. And looking at the kind of infrastructure budget, which the government has outlined in this year's budget of 10 lakh crores, that is definitely going to benefit cement companies a lot. So I think he should take a 12 to 18-month view. I think Shree Cement has one of the larger cement capacities, plus it's got its own power generating plant, which helps them to keep their costs low. So keep the time frame a little longer, and any dip can be used as a opportunity to accumulate here. But time frame should be at least minimum 18 months. To MRPL, because see, all the oil marketing companies delivered very strong numbers in quarter 3, and that was aided by softer crude prices. So I would believe that even the March quarter could be equally good. The best part for most of the oil marketing companies is that both sectors like aviation and auto, which are large consumers, have actually shown a strong throughput. So I think he should hold on for the next, say, 3 to 6 months. My sense is that he could expect a price of at least 65 or 70 odd. Hopefully, if crude prices correct further, then one could expect a further re-rating here. So at this point, it's better to hold the investment at the current odd level. Overall, banking sector, Shree, has done very well in quarter 3, and I think we could see stronger numbers not only for the March quarter but even for FY24. My sense is that I think in Indusind Bank also the kind of numbers which were presented in quarter 3 were quite solid. In fact, on the asset quality side, on the loan book growth side. So if at all he wants to shift, he could possibly look at say smaller banks like typically from the PSU space, something like a Bank of Baroda or a Canara Bank. SBI also is good, but definitely it's a far research stock, so nothing significant at least in the near term looks possible. But yes, from a longer term perspective, something like a Can Bank or a Bank of Baroda could be better, where he could decently expect a much better risk reward as compared to Indusind Bank. Indusind Bank is also good for the longer term, but in the near term it could struggle. And if the investor has a short term view, then I think it's better to shift to the PSU banks, where I feel a significant amount of re-rating is yet to happen, and balance sheets are strong, the asset quality is good, so this could be a good switch. To give a target price is difficult, but I would believe the quarter 3 numbers have been very solid for Pennar, and they have a diverse set of customers. The order book is almost close to about 1,000 odd crores, and I could not be surprised that even the March quarter could be equally strong, and the year FY24 should be much more promising as compared to last year. And looking at the kind of earnings trajectory, I think a price target of 9,500 rupees looks very much possible. So I think he should hold on. This is definitely a stock which has bounced back quite significantly post the Q3 numbers, and I think there's a lot of interest in this counter, considering that now going forward the market expects a stronger earnings growth trajectory in the next say 6 to 12 months. So continue to hold and look at a target price of 100 initially, and afterwards of course one can take a fresh review. I would believe, IDFC first, Shree looks pretty attractive at the current odd level. In fact, now they have reached a CASA of almost 50%. Their net interest margins have improved significantly. And recently, IDFC, their parent company, infused more than 2,000 crores, which clearly shows the kind of confidence the parent has got in the bank. I would be more confident on the bank, considering the fact that now with normal activity happening and the bank gunning for faster aggressive growth, one could definitely expect better numbers for the next say 12 to 18 months. So this could be a good low price stock with a decent amount of margin of safety, and where one could expect a decent level of about 73, 74 over the say next 12 to 15 months. So this could be a good investment choice at the current level. I think Sudarshan Chemicals is one of the larger players in the pigment market and the agrochemical market, and I think pigment business has got drastically hit because of a significant slowdown in the European markets, where Sudarshan exports in a very big way. My sense is that this kind of correction in the pigment market would take at least 1 or 2 quarters to completely recover, and for the company to get back on the profitability trail. So the investor has purchased at a significantly high unless he's got a 2 year view, I think he should not remain invested in the stock. Unless he's got a long term view, only then he should hold on. Otherwise, I think the kind of price he has invested is a slightly higher level price, where I think at least in the short term it's unlikely to see those kind of previous record high levels.